Okay. Okay. Officially, welcome everybody. Sorry for the delay. We had some weather difficulties where I am. Apparently, I've got some windows that need to be evaluated for there. I mean, it was sideways. It was crazy. Hailing, water piling up. My backyard is flooded. It's just standing water out there. Insane. So, whoo, okay. Here we are. It's Tuesday. Another good day. Another good day in the market today, although not a ton of volume, but we'll talk about that. Welcome everyone to the working sessions. This is where we're willing to talk about the beginner concepts. Nothing formal. And as we go, I've been mentioning to people, I've been saying, hey, that's a great thing to bring up in the foundations. So hopefully, when that is said to you, you're making note. And then when we get here, you'll bring that up, and that'll be a nice talking point for us. Let's go through the routine. Disclaimers as always. Not advisors, not brokers, no recommendations, no advice. Yada yada. All right, let's get into it. Colgate. That looks like it's setting up. A lot of other things are maybe not. Yeah. Let's talk about what happened today. So, I need this over here. What is going on with my mouse? This is so strange. I cannot move this window. Give me a second here. My phantom mouse is having issues. I hate to be cliche, but when it rains, it pours, right? I know, it's terrible. Terrible, terrible, terrible. Okay, what is going on? There we go. Let's talk about today. Where did my Yahoo just go? I'm like making myself dizzy. If I'm making you dizzy, I'm making myself dizzy too. Huh. Okay. Well, let's just go to the market. I'm not sure what's going on if my internet's all the way back up or not, but there is today. So yesterday we said, all right, let's see, are the buyers done? Maybe, maybe not. We finished positive for the day. It was a doji, it was red, and then what today? We got more. We got better volume today than yesterday, but it wasn't above average volume. I tell you right now, I had already said, that's not the right color. I had already said this was enough. Now it definitely is. if there was any concern, we've now broken above the 50. So the buyers have done quite a bit. They haven't done it with a lot of conviction, meaning above average volume. We really only have like literally one day. Literally just one day. But it doesn't matter. This is where the underlying strength of the market is carrying this to some extent, right? Is my Yahoo Finance working? Let's reload. And the futures are flat. So what happened today? Well, man, none of my pages want to work today. What do we have today? We had the producer price index. The PPI dropped to 0.1. Core PPI was up by 0.1. This was a big one right here. PPI year over year, 2.2 down from 2.7. The market liked it. I mean, it was not across the board. You can see the core numbers are still like a bit iffy. Core year over year went up a tick. Core month to month went up a tick. But the drop that we saw in the PPI, the standard PPI year over year was big. The market loved it. Loved it. Why? Because it just gives the Fed more leash to go ahead and make those cuts. So tomorrow we get more, but I wouldn't expect much more now. Like, it's not like, oh, we got good CPI. The numbers are already pricing in improved inflationary numbers. So, yeah. What else? We have on Thursday, we have jobless claims, which eased back down where people are more comfortable. Retail sales, production utilization. Do I think CPI will push it up further? I think it could, but I think it's kind of all pricing in the same thing. So I'm not going to be surprised to see this current bullish move coming to an end. Right? Which is good. We want it to come to an end. That's the only way we're going to get new trades. So yeah, we'll talk about that. We will talk about that. Based on what we saw today. Let's see what the numbers indicate. Are you asking where are the indicators pointing for SPY resistance? I mean, there's going to be several levels we can look at. We're well below old highs, so there's plenty of upside room. So you'll actually notice that we're now better than 2-1 in favor of, this is a half a point here, right? That's a half a point cut. This is a quarter of a point cut. So the market has priced it in. And this information is further giving confirmation, essentially. November. Yeah, I mean, everyone's pricing in that we're skipping right over. And then we go to December. Yeah. Okay. Another bullish inflation signal could portend well for CPI. Okay. Well, let's start with this. What are you trading? What are you doing? What do you want to talk about today? This is a working session. What do you want to work on? We can go through the watch list and see what comes up. But if you have something particular, I'm always would prefer to start with that. Let me AXP CBRE. All right. Let's just start popping through. So you can see here, and this is where people are like, oh, but look at all this white. Should we get in? I want you to look. That's the move. We got something kind of like that right here. You'll notice. That's similar. We got something kind of like that right here. Ooh. With earnings, we a little bit got something like that. A little longer, and that required earnings. And the second one was a recovery after earnings. Those are the 5 biggest low to high moves that this stock has made in the last 6 months. There's 4 of them. Did I say 5? I meant 4. There's 4. Now, what would this tell me? This would say to me, is it time to get in? I'd be like, well, it's already moved at one of the biggest levels. Like, it's already done everything it's shown us the capacity for it to do, right? So if we were getting in, the question would be, for what? What would your expectations be? Because if we're going to talk about getting in, we know the rules. We have to then talk about, well, if we're getting in here, what's our stop? Where would I know I'm wrong? What's my target? How much do I expect if I'm right? What's my timeline? If you look at the prospects of building a reward to risk ratio that's even positive, let alone favorable, right? This is where it's hard. I have a very simple rule. I'm gonna show you this. Let's go back to the Heiken Ashi candles. This is really your last chance. There, I would say it was your last chance. Here, it's one of those two, and you can see it gave you a little bit of leeway, but I want to be in on that. I want to be in on the last red candle or the first transition candle, right? Or even now, again, remember this is earnings, so I wasn't going to put a trade on here. Or even on this first. That's it. These are the 3 days I'm looking to be in on from a Heiken Ashi standpoint. Sorry, I don't like the way that's so fat. Does that make sense? So this is a quick validator. I'm not using this as an entry signal, but I do like to just go check and be like, hey, my objective is last red, first white. Last red, first white. Last red, first white. Last red, first white. You could even go right here. Last red, first white. Okay? Now, when I go back to the standard candles, what are we looking for? Well, now we draw a line down here, and what are we looking for? You can see it came back and turned. And if I come down here, came down and turned. Right? There's that. That's a tough one right there, but it did it. Here you can see, comes down and turn. Here you can see, comes down and turn. Okay, that's it. All we're doing here is just saying, hey, do our signals make sense to us? Is this going to work? But with all of this, what are our prospects for getting into Apple now? It's not for me. Hard to make that case. maybe 3 days ago you could have made a case for like an hourly chart or a 2 hour chart where you change your perspective a little and you say, hey, I can at least trade these little dips. But at this point, even that's getting hard. Once again, why? Well, because we're at the length of what we've seen as the capacity for this stock to move. I'm not going to ask for more than I've seen it do. It's like, all right, this stock has made a 10-point move, 10-point move, 11-point move, 10-point move. And we're like, awesome. I'm looking for 16 points. And you're like, wait, did you just hear what I said? 10, 10, 11, 10, 16. No, we've gotten it. So that's something that I get asked a lot in coaching. How do I know? You never know anything. How can we evaluate? Am I too late? Well, that's going to be, again, a combination of probability. How likely do you think you are going to be right? And profitability. What is your reward to risk ratio? The longer you wait, ideally, that means you're getting more confirmation, and so you have a higher probability of success. The longer you wait, the smaller your reward to risk ratio is going to be. That's just an empirical fact, right? And that's where we're prevented. If this thing's already moved, what are we asking for? I'm looking for it to get up to 240, just going straight from 200 to 240, nonstop trip. It's never done that before, and yet we're asking for it. Amazon. All we had today is one more day of confirmation that we're on the money with thinking this is enough, right? The buyers have done enough that if the sellers are timid in any way on this mild pullback, we're going to look to trade. I'm going to look to trade. But this is where it's like, oh, the market was up today. I should be taking advantage of this. I should be getting in on this. What should I do? I should get in. And we lose patience because we're like, it's like when you're in traffic and you're like, oh man, that lane's moving. And then you look again and you're like, it's moving. And then you look again, you're like, damn it. And you jump in that lane. And then immediately that lane shuts down. And the lane you were in starts moving. Yeah. Don't do that. Right? That's not what we want. So, yeah. Relax. Let's wait. I'm not going to force trades. I'm not going to be like, oh, now I'm so bullish because it was another bullish day. So we know what we see. We know what we think. The posture stabilized, right? Remember that? Posture stabilized. If you weren't there, let me pop that up real quick. There's the posture. Long-term trend, stable at a solid 1.25. Short-term, stable at a still slightly bullish 0.5. Volume eased up a little bit. Okay, good. Major market dropped a little bit. The strength of the small cap move motivated by interest rates has ebbed. Sector rotation, there was quite a heavy bit of dipping into defensive waters, consumer defensive, the staples, utilities, etc. Volatility stayed the same though, and depending on what happens, let's say the market pulls back for a couple of days, and then it turns back up. That's gonna be a lower high. I'm gonna score that more favorably than not. So, is there a lot of opportunities right now? You're gonna have a hard time. Let's keep going. I'm gonna leave my numbers, see if they hold. Nope, they're too low. AXP, I like it. It's one of my favored financials. Barely even dipped below the 100, but it just hasn't given much, right? It just hasn't given much. Last 3 days, it's been basically at the same place. Volume is less than half Um, there's some heavy old resistance right through this area here, which extends over. Great. I would much rather, even if this got higher one more day tomorrow, I'd rather wait for it to do this, and then that's my entry. And I know that's where, when I can get in here, that's where I'm thinking now I'm getting 2.5 to 1, 3 to 1 with a higher probability of success. Patience pays. BAC. I like BAC. But the same thing, you'll notice for 4 days straight now, what have financials done? Nothing. But if they pull back just a little bit, hold the 200, yeah, we have our go signal. BLDR. Oh, look at that. That just kind of snuck out of nowhere. Citi, I did not like Citi as much. You can see Citi's just barely back above the 200. Caterpillar. I like Caterpillar, but I need it to pull back. It looks just exactly as it has for 3 days. I'm still waiting for this pullback to come. CL. That's viable. That's close. If that turns, I would take it. I'm looking for it. CMG. What the hell's going on with CMG? It is chopping around. Gap down, sold off, then rallied back up. Big volume. There's got to be some news. What's the news? Did they have a salmonella outbreak again? Oh, Brian Niccol left. Is that the CEO? He left and went to Starbucks. Okay. Okay. Starbucks jumped today. Let's take a look. Oh man, look at that. That Starbucks loved that news. Starbucks was just dumpster diving for a while after their latest earnings announcement. They missed expectations there. And then they, looks like they barely missed expectations here. But now all of a sudden they're like, but we got the coolest kid in class coming to our party. So what do you think about that? And the market's like, we love it. Can we come to your party too? It's amazing. And that's why Chipotle dropped. Oh man, that guy had a great impact. Amazing. Okay. CBRE. Someone asked for that, right? CBRE. Let me go see that. CBRE. Oh, okay. Okay. Now that would be a first first white candle, I bet. Boom. A little jiggly right here. But yeah. That would be something where I might say, hey, I can put a stop loss here rather than all the way down here. Target price. $86 to 12 points. 1950. Overly ambitious. That's one move. 2 moves. Elliott Wave tells us we still have 1 more to go. Huh? 1, 2, 3. Eyes on me. What do we think here? 110. So I would say my stop. Yeah, I'd be comfortable with a tighter stop. maybe 3-4 points to the downside, 10 points to the upside. I think you've got a prospect there. Yeah. Thoughts? Anyone? CBRE. Yeah, I think that's viable. That's a good call out. If there's anything that's showing prospects, that's it. For now. Maybe there's more. We'll come back to that. Let's get through the watch list. I see some more people showed up. Hello, everyone. Good to see everybody. We've been just chatting about market conditions. A little bit of this, a little bit of that. We said that CL is possibly setting up, and we said that this is one from David, CBRE, real estate, I believe. Nice strong stock. That's a nice viable option for a trade right there. We're gonna, for now, if we don't have anything else pop up, that's what we're gonna explore further. Those of you who are just coming, good to see you all, by the way. Glad to have you. Okay, where were we? Costco. I love Costco, but it's got to pull back, right? We're not looking to jump in now like, whoa, maybe it'll keep going higher. CSX pulling back, no. Carvana, Carvana just popped. That was tough. I wouldn't chase it down. It's up 10%. We missed it. There's the Dow. Fastenal, FAST. It's bouncing. It seems like it. I don't know. I like Fastenal. I think that has some prospects to it. Let's see. Maybe not quite yet. A little bit more action. Bit sideways. Yeah, I'd like to see a little bit more. A little bit more. Bitcoin. Ooh, what's Bitcoin going to do? It's running out of steam. Gold is hitting some resistance. GM. I like GM on a pullback. Google hasn't done enough for me. Home Depot just did earnings. How did they do? 454, reported 455, or they exceeded, but barely, but yeah, good day. Small caps today, trying to turn back around. Who did better? Hard to say. JP Morgan is another one of mine that I like, but it's overextended right now. There's not much we can do with that, but wait for it to pull back. KBH, no. Coca-Cola, no. Oh, Coke's close. I like CL better, but Coke's a maybe. Meta, just so strong. Look at that. I got to wait for the pullback. Now it's almost going to be a cup and handle. MMM, that's a possibility right there. You'll notice what there's a pattern. All of the ones that were like, oh, this looks pretty good. Where are they? They're in consumer staples. So yeah, I would say MMM has some validity to it. What was the other one? CL. Morgan Stanley, I like JPM better. Microsoft. Oh, hey, Microsoft. Looky, looky. Popped on up. Looking pretty good. Little pullback. Ready to go. Ready to go. Micron. I mean, NVIDIA had a big pop today. But I still think I like TSM better. Netflix, I like. Netflix and Meta are carrying the communication services group right now. NVIDIA looks good. It's done enough. Right? It has paid penance. We're back in good terms. All we need to do now is wait for that pullback. Made some money. Good. So then you're trading some shorter term signals, I would imagine. Maybe looking at 2-hour charts, 1-hour charts, or were you trading coming out of this? Yes. Okay, there you go. Love it. So that's something that we've talked about, right? Is, hey, I can come down and I can try to catch some of these little pops. You'll notice a lot of these pops come overnight. Sideways, 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 boom. Sideways, 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 boom. Sideways, right? And so it's like we got to catch that early on. Yeah, a few different perspectives that you can look at there. Your time frames will be shorter. Your stops will be tighter. That's how that works for us. NVIDIA OII. I don't know. That looks like a shoulder. Looks like a big old head. PLTR looks great. We need to wait for a pullback. QQQ reemerged. Technology is reemerged. This looks fantastic. This is what we said. We're likely looking for to happen. Right? So, yeah. SPY. Wow, that looks so strong, right? TJX. IFI, TSM. I love it. Just waiting for a pullback. The dollar staying down. We like that. The VIX. All the way back to 18, you guys. This is such a blight on the market. Such an overreaction. My goodness. Right? It's much better, isn't it? Interesting thing is we're still not all the way back to the old lows. I like TSM. Walmart. It's a bit iffy. Okay, let's take a quick peek at our sectors. We'll take a little break. When we come back, we're gonna look at CBRE and play with it as like a setup candidate. XLB materials look okay. This looks great right here. Communication services looks great. Energy looks weak. Financials look strong again. Industrials look strong again. Technology, money's flowing into all the right places. You can see Staples is a little iffy, but that's where we have a couple of interesting looking things, except CBRE is real estate. That's why I'm looking at that one. Utilities. Utilities actually looks a little defensive still. And here's healthcare. Okay, that's what we have. Look, things have improved quite a bit to the point where it's like, hey, it looks like we're coming out of this ready to go. But that doesn't mean that we can just start jumping into trades. We're still waiting for the right signals. A lot of things are not showing signals, so that's what we're going to be patient for. As of now, we do have one that we're going to look at. So let's take a quick 5-minute break. We've been going here for 40 straight minutes, even starting a little late. If anyone pops in, you can let them know. Although I'm going to turn the slides back on. I'm going to turn the slides back on, and oops, there we go. Yeah, that's it. 8:50. That's in 6 minutes. So stretch your legs. Starts at 8. No, 6 minutes from now. What time is that for you? It'll be at 6:50 for me. See you guys soon. Okay. I completely forgot to stop the recording. Let me stop the first recording. I'll go back and cut the 6 minutes of silence off of it. Okay. Okay, give me 1 second while this thing processes the first one. So if you just came on, we're starting in just a second. It's taking its time. There we go. Okay. Let me start again and officially welcome everyone to the second half of today's Trading Foundations session. This is the working sessions for intermediate / advanced, though I only say that simply because we may dive into deeper things, and we absolutely won't in the first part, but I hope that doesn't steer anyone away from coming or not coming to one or the other. My name is Scott. I'll be your host. Here's the disclaimers, and to the platform. To the platform we go. So, we revisited our posture. Did we nail it? I think we did. Right? We said we're looking this week to see that our posture stabilized. Our numbers stabilized. We said we're looking for the recovery to convince us that the buyers have done their part in moving back into tradable positions. Now what? Now we're thinking about what would we trade, and unfortunately, there's not much. It's about being patient, not chasing the current momentum, waiting to really be convinced of what we think is coming next. So, as we look at this, let's get the CBRE. Okay. This is what we've looked at as our best momentum play now. You're calling it a night, Sandy? Let's run some numbers on this. Since we had what I would call a hiccup on this trade, so let's talk about that first and foremost. Let me get my drawing tools out. This is where, now, when we're done with this, would this be a great opportunity to paper trade no matter what? Yes. Always a good idea to paper trade, especially if you're new, right? Especially if you're new. So is this where I'm saying, hey, look, we're going to take this trade. This is a good trade. No, not necessarily, right? Not necessarily. So what do I mean when I say hiccup? I mean that we had a big bounce up, motivated by a nice earnings report. Higher high, pull back, higher low, starts to turn, valid signal. Right in here, that's valid. And then it was stalled, and then it pulled back, and that's the little hiccup, and then today it's like, nope, we're going. Now here's the thing. If I would do this trade, I would want to do this trade most likely within this range here. I would say halfway up this candle, but no higher than the high. So if tomorrow it opens in this range here, I would be like, yeah, that looks pretty good. If it opened lower than that, I'd be like, oh, shoot, that's too much selling. I don't think I want to buy into that selling pressure. Moving blue square dots. Oh, no. You don't see the drawing right now? Sorry if you don't see that. I hope no. What about everybody else? Oh my, we've paused. Let me see. Yes. Okay. Everybody seeing it? Okay. Okay. Your stream is still running. Oh, they've just paused the preview. Okay, you should see it. Let me know if not, but this is what I mean. This little last little, that's kind of my entry area right there. So if anyone ever is wondering about a trade alert, let's kind of talk about that at the same time. PJ brought this up. He said, how do I want to be, maybe it wasn't PJ. Sometimes I just randomly assign things, and maybe it was you and maybe it wasn't. So if it was you, PJ, I nailed it. If not, sorry. How do these alerts work? So let's talk about that. Let's get a template of that up. So if I were putting together a trade on, let's minimize this so that we can work on it without it taking up too much room. Nope, I didn't want to do that. It's so funny. My dog is not at all scared of fireworks or thunder or lightning, but he hates hail. He doesn't like things knocking on the window. Makes him super aggravated. Super. I don't know why my mouse is so finicky today. There we go. Ah, it was you, PJ. Yes. Thanks for letting me know. Okay, so what are we talking about? We're talking about CBRE. This is a bullish trade. Entry range. Okay. Our range is halfway up this candle. I'm going to call that 109.50. Up to the top of this candle, 110.76. 109.50 up to 110.76. That's the entry range. If it's higher than 110.76, by the time I'm in it, I'm thinking, oh, I missed it. If it's 110.77, you got to have a number, right? You got to have a threshold. If it is below 109.50, then I think, then the sellers came a little too far. Now, that's the entry. So we're basically saying, as of right now, it is viable. The signal is viable. If we wait too long, we lose a little. If it drops on the open, then we're thinking it may reset it. In at 110.74. Ah, okay. There you go. Now, stop loss. So for a stop loss, I would say I'd probably maybe go as tight as just below this low. When this is low is 110, 107.50. 107.50, and I'd maybe give it like a dollar range, maybe 106.50 to 107.50. Now here I'm going to say 107.50. That's the tightest I would go by 106.50. Now, so far so good. I would imagine I would actually anticipate my reward to risk based on a 110.35 entry, which is what we closed at. Because until we know what it opens tomorrow, that's all we can go off of. What's my primary target? That's a good question. I think we said 119.50, right? We said a good chance of making this move up here. So I'm going to say 119.50. And I would say 114.50, there's a potential take profit level. So that's basically about, if we get in, that's about halfway up. It's at this old high. If it gets to this old high and it's in that area, we might take a little bit off. If not, go in. Time in the trade. This is I would say 5 to 7 days. I'm not looking for this to take a long time. It should be moving right now. So let's say that we enter this trade at 110.35. We put a stop loss at 107.50. I'm risking $2.85. $2.85. 119.50 minus 110.35. 915 divided by 285. 3.21. Volatility index. It's just spiked up a little bit. I would say mid. So if you're going to do an options trade, right? But let's just pause for a minute there. It doesn't look like there's a lot in here, but I feel like there is. What questions do you have about anything in this top part of the alert information, which is breaking down the stock portion of the trade? Any questions about that? And hopefully, please go over rows below profit target. Sorry, the primary target or the take profit target, time in trade, which one of those is unclear. You can just pick one of these. Let me make that a little bigger. You can pick one of those. Time in trade. Yeah, how long do I think this is going to last? I don't think this is a 1 month prospect, right? This is, so time in trade is, I expect that 5 to 7 days. 1, 2, 3, 4, 5, 6, 7. Like that's it. What I see here. If it's not moved by this point, I'm going to start getting a little antsy. Time in trade. How do we guess that? Well, we're going backwards and saying, how long did this move take? Right? And we have a move here. And we're saying, how long did this move take? Let's say 1, 2, 3, 4, 5, 6, 7, 8. That took 8 days. This one took only 6 days. When we got this move here, 6 days. Right? So if we're trying to catch a certain level of momentum, you speculate at that. Speculating is a better word for guessing, don't you think? It's fancier. Like, what are you doing? I'm guessing. What are you doing? Oh, I'm speculating. I'm over here speculating. I'm a speculator. Making educated guesses. Speculating. Yeah, we're measuring. This is the same way that we figure out how far do you think it's going to go. Well, how far did it move the last time when it made the type of move that you think it's going to make this time? And how long did that move take? So I've got 2 of them. That's helping me to understand how far and how long. And that's going to help me get my target and my time frame. Yes? Makes sense? So we're using the past history of and pattern of behavior as being indicative of what we're looking for. This time we're guessing, right? I mean, not guessing. We're speculating, which means we're taking risk in the face of uncertainty. We don't know what it's going to do. Well, if we can make it as educated as possible, if we can trade with the trend, if we can get favorable reward to risk ratio, well, then I think we have what we need for incentive to do so. Stop is tighter than yours. Why is mine tighter? Well, because of the hiccup. So for me, the hiccup is now where I'm saying that hiccup now marks If it breaks below that level, that hiccup has failed. If the hiccup fails, the trade fails. And I don't need to give it more room than that. That's my thought process by that. If you went a little farther initially, I get it, right? But the thing you have to ask yourself is, do I need to wait for it to drop down there before I have ascertained that I am wrong? If you know you're wrong sooner than that, then you can make that adjustment. But that would be my stop with that. So you base it on previous patterns to speculate the duration of the trade. The duration and the potential in its bullish or bearish movement. Lee, yes. Yeah, we got to start with something. One of my rules of thumb is I never use one move. So if I look back and I'm like, all right, it moved $5, $5, and $7. I'm not going to use 7. It only did it once. I'm going to do 5 because it's done that 3 times. Did 5 3 times, it did 7 once. If it did 5 7 7, then I'll be like, okay, yeah, let's go for 7. Let's go for 7, but let's take profit at 5 just in case. Just in case. Let me know if that resonates. If that's right, we have to, if we're going to figure out reward to risk ratios, we have to figure out reward. We have to have a target. We have to figure out risk. We have to have a stop. We can make adjustments, but we got to start with something. Got to have something to begin with. Okay. I feel like it's a good discussion. You guys tell me if this is helpful or not. Well, let's keep going. Do I have a Heikin-Ashi candle yet? I don't think I do just yet, but one more day and I will. Yeah, one more day and I will. Anything above 110, and it's for sure a Heikin-Ashi candle. Yes, this is all in place. Take half profit. Makes sense. In a better market, you might only take a quarter profit. You might be like, hey, I'm just going to take a little off, and then I want to ride. I'm going to see if I can, I'm going to show you guys something. During our break, my wife called me outside. And I took a picture, and I think I could post it. I'm going to go in and see if I can. Maybe I can't. There's this park right around the corner, or right down the street from me, and it looks. Ah, shit. Sorry. Sorry about that, everybody. I kicked everybody out. I ended the stage. I was trying to show you a picture and I ruined everything. That's my fault. Let me get my screen shared. It's insane. This park looks like a lake and it's not supposed to be that way. I think my basement might be a little flooded too. I'm not looking forward to what I'm going to find down there when I go back down. Did I lose some people? Doesn't it just let you right back in? Oh, shoot. All right. Can you guys hear me again? Yes. Okay. Thank you. All right. Let's finish this trade. We'll forget about the lake. I'm gonna go get a canoe and canoe around in my backyard lake for fun later tonight. Okay. Okay. Where were we? Let's get back. Let's get back. Now let's take the alert and build a stock trade. And then we'll do an option trade. Stock trade, then option trade. So let's get out of this. Delete. Let's get out of this. Let's analyze. Kind of thought we drifted into the Twilight Zone. Yeah, we like to keep it interesting. I lost a couple of people, so I don't know what I did. I will have to apologize. Anyway, you see my screen too, right? See my screen and you hear me? Well, it's weird because Clint is it doesn't even show you're in the room. Like it's like you're talking to us, but it doesn't show that you're in the room. I don't know what's going on. I have no idea. So weird. Okay. Let me hide this. And let's go to CB. Oh, we didn't end up. I'm like, what did I do with this? There's our Carvana trade. 146.19. What do we think it was going to get to? 154. I'm curious how that did. We were looking at that one. 154. Okay, so that'll be on its way. Let's go back to CBRE. And let's CBRE. Oh, come on. Now it's making me re-sign into my paper account. So, yes, Clint, let's summarize while I re-log into my paper so we can build this thing. Base target and time on past. Yeah, what I would recommend is find at least 2, ideally 3. The past 3 bullish moves. What are you going to do with those past 3 bullish moves? You're going to measure them for both height and width, right? So how far is it likely to move and how long is it likely to take? We can use a previous. Ideally, we're going with a trending stock because that gives us an expectation of a higher high. I don't think it's going to run out of steam at the previous high, but I do think it might stall there. So my thought would be, hey, maybe I should take a little profit there. Well, how much is a little? Well, if it's a strong bullish market, 20-25% only. If it's a little choppier like it has been, I might be more inclined to be like, you know what, I'm going to take half. Of course, my Thinkorswim is when it rains, it pours, as I said. All right, let's go here. CBRE. Risk is entry minus stop. Reward is target minus entry. Creates reward to risk ratio. Does that all sound good? Yes, it does. So we are looking to buy CBRE. What is going on? We are looking to buy CBRE at a price of, we said 110.35. 110.35. That was the current price. We said we're going to set a stop loss at 97.50. $2.85. We're going to set a target at 119.50. Yesterday, where is she now? Winsome was here, and then I lost her. So when I kicked everybody out, I kicked her out. I'll have to remind her to come back and watch the video because she asked about the slices. The slices are going to give me my reward to risk ratio. So not 97.50. That's wrong. 107.50. That's right. 285. 915 to 285. There's my reward. There's my risk. Now, the next thing I could do is control the risk using the stock. So let's say that I have a $25,000 account and I want to only risk 1%, 250. I have too many shares. 90 shares? About 90 shares is about 250 bucks. 90 shares, 250. Okay? That's it. That's my trade. Now I could add another slice in here. Only one though. I don't know why I added two. And I could put 114.50. That was my intermediate level. And then I can reorganize these things to get them in the right order. And then I can add them to my chart. So that now you can see here, this is my entry, stop, first target, second target. This is my trade as I see it showing its ability to move. Okay, that's a stock trade. Now what? Well, now let's make it an option trade, right? Let's make it an options trade. Did this thing ever come back on? It sure did. Let me get this back up and running. Okay. Now, we don't have great options. There's only standard options. I'm a little concerned already. 3 days clearly is not enough. 38 days, plenty. That's where I'm going to go. Open interest, it's not great. Right? 800, 300. You're like, that's not bad. There's only, 4 contracts in here. Your spreads are acceptable, but not great. What does that mean? $2.05 by 185. That's a 20-cent spread on a $2.05 option. That is 10%. 30 cents on 440, less than 10%. 30 cents, less than 10%. So that's all. It's less than 10%, but when we trade really liquid things, it's 4 pennies, 3 pennies, 5 pennies, right? So that's the difference. I would probably go out of the money, which means I would go to the 115s, and I would start here. Now, I'm going to uncheck this. What did I do? I want you to notice I'm unchecking this stock box. I no longer want that considered. It's not being considered. All of these numbers are now only looking at the option. Remember, we said we don't want to risk more than 250 bucks. When we look at the stock, we don't have to worry about time. I didn't adjust the date at all. It wouldn't matter if I did with the stock because time doesn't impact the stock. It only impacts option. But with the option, I need to say, okay, you know what? I'm going to stay in this trade until, let's give it till Monday. So we're going to let it have the weekend. Okay. So I've built, maybe I should even give it a full week. Let's just give it a full week. 820. What is our reward to risk ratio? Well, you can see, I'm going to adjust this, but it's 1,100 to 4,400. That's 4 to 1. $1,100 is too much. I only want 250. How close can I get to 250? Remember, 250 is what we said we wanted for a risk level. So right here is what I'm looking at. I'm trying to get that down to 250. $226. Okay. Fair enough. I'll take it. 220. That's where I'm looking to get out. Now you'll notice if I get to my first target, I'm only getting about 1-to-1. And I only have 2 contracts. So I would have to decide, am I willing to sell one contract there and then get the other one and try to ride that up here to 900? The total would be 440 plus 130, 570. 570 on 226 of risk. It's better than 2-to-1. Why out of the money? Because the options are relatively cheap and I'm going to get a better bang for my buck. You can always test that. The other thing is this. If you went in the money at all, you're not getting 2 contracts. You're only getting 1 contract for 250 of risk. Right? You'll notice that we barely squeezed out 2 contracts going out of the money. So if you want to have a trade in multiples, you have to do that as well. Great question though, Sandy. I can always count on you for a great question. So yeah, you would have to decide, do I take half off there or try to let it ride a little bit and try to ride all the way to 119.50? But 2 contracts. 2 contracts. That's all we need. 2 contracts starts out at 68 delta and eventually becomes 100 to 150 versus 90 delta for the stock. You can see everything is all in the same place. So now, that's my trade. I can either buy, now if I buy 90 shares times $110 a share, that's $9,900. That's a lot of my $25,000 account. If I have a margin account, they're only going to charge me half of that. They're going to tie up about $5,000. But even if they do that, if I have 5 trades on, I'm going to be pretty close to maxed out. So trading options isn't about I want to. Sometimes it's about I need to. If you want to have more than 5 trades on, you're going to need to learn options in order to get leverage, in order to allow yourself the ability to take more risk in your portfolio when the time comes. Makes sense? But this is the same trade. Whether I buy the stock or buy the option, I'm looking for the same thing. 114.50, 119.50. I'm wrong at 107.50. Right? My risk level should be no more than $250. These are the things that I'm trying to make consistent. Thoughts, questions, comments, or concerns? Oh, I feel so bad that I bounced everybody when I was just trying to show you a picture of my neighborhood lake. We never used to have a neighborhood lake, and now we do for at least a day. I should get an inner tube and a beer and just go out and sit in the middle of it in my inner tube and drink a beer just because I can, only for today. It's not very warm though. It's cold out there. Okay, what do you guys think? A good working session? I feel like we've weathered the storm, so to speak, so far. I feel like we have opportunities knocking. We're waiting. We're being patient. I hope it's helped to talk through it step by step. You know, this could have been a hard time this last few weeks. Right? So, very good using the Analyze tool. Yes, I'm going to post it right now. Both of them. Well, at least over the next 10 or 20 minutes, Lee. I'll probably post this one first because I got to go edit the other one and take the extra space out. Please show the stock signal table one more time. The alert, this here, Yes, got it. Right. So then we would start coming in here and saying that we're doing a September. We're doing a $115 call. We figured it was going to cost us about, right? And that's the rest of the trade. We said this was going to be about $2.05. Out of 205, we're risking about 125. So yeah, we're risking about, I'd say, 115 a contract. And I'd say long calls. There we go. That's the rest of the alert right there. That should be $1.25. Oh, $1.15. Was that rounding? Don't round. There we go. 115. So hopefully that helps you feel better equipped the next time an alert does come. It'll look like this. It'll feel like this. This just gives you, right? So here's the thing. Well, I had somebody who's like, well, aren't you going to give us updates? No. I've given enough, right? Like, if there has to be where you're really working on the exit strategies and the exit rules. So no, I'm never going to give a follow-up. This is it. This has 2 targets. If you decide you don't want to sell at the second target or whatever the case may be, that's discretionary. I don't know. Does that feel like it's not right? I feel like it's a good way to really give you good starting points and then the ability to still learn from the trade while you're taking the trade. And to be honest, I just, I don't think I would trust myself to make sure that I send it on time, right? Is vol assessment the sum of put and call? No, the vol assessment is really looking at, the vol assessment is looking here at this implied volatility measure. And are we generally more low than not? Anything in the mid to low 20s, anything that's at the lower end of its chart, those are going to be things that I consider low enough that I'm buying options, if that makes sense. Yeah, Clint, I love it. That's a great comment. I agree 100%. And so, honestly, I think it gives you the ability to be like, you know what? Scott was thinking this, but I'm going to put mine here. Yes, that's what I'm hoping for. Not like, oh, he didn't tell me exactly where to put this, so I don't know what to do. That's not helpful. That's not helpful for any of us. I agree with your assessment, Clint. All right, well, let's hope it doesn't let's hope that it doesn't rain anymore where I am. And then we'll go from there. I hope you guys have a great rest of your night. And as always, happy trading.